So today we are kind of playing on top of the last one, which was QuickBooks 101. So if you weren't in that session, which I think we have more attendees today, so you probably missed a lot of that, we're kind of operating in the assumption that a lot of you are kind of up to date on the basics of QuickBooks. And then I'll go ahead and share my screen. Tell me if the double screen is too small or allows you to see okay. Can you guys see okay? All right. So today we're going to be covering the best practices for clean and consistent record keeping, tools to streamline monthly review and stay on top of business health, and how to track KPIs. Okay. So just to review the last session that we did, best practices for clean and consistent record keeping. I'm actually going to give me 1 second while I fix this. Oh, that's not going to, hold on 1 second before I start. I'm just going to turn this off because I'm looking at a different screen. Right. Okay. Last session, we talked about how to complete basic bookkeeping and monthly work for proper period close. This session will build on that idea. And if the period's closed, you're able to analyze your financial reports. So the important part of that is obviously that your books need to be clean and up to date before you start doing your analysis. I have this little symbol here that I would like to keep or have you keep in mind throughout the entire presentation, which is garbage in, garbage out. It's one of those phrases that kind of constantly rings in my mind and is always at the forefront of everything I do. So the thing about doing it yourself can be really beneficial to feel empowered, to understand your numbers. The other problem is that you're not going to be the expert and there may be mistakes. So keeping that in mind, you just want to set up controls and keeping things clean and consistent so that we're minimizing those errors or catching them as we go. So a little recap that we did from the last session. We talked about keeping a clean chart of accounts and simple. So depending on your industry, these accounts may vary. This is a very, very simple, dumbed down, generalized chart of accounts. But the idea that I want you to take away from that part of it is the fact that as you're building out tools for analysis, it's really important to have a minimal amount of accounts or accounts that are specifically things that you're looking at in order to derive the results that you want and be able to look at the metrics that matter. So QR code for keeping your account simple. You guys can check out this template if you need it. Again, you can build on this. It's not set in stone. It's also probably not the best for GAAP, but for managerial analysis, all of that stuff, this is the way to go. So the other important part is to reconcile each month. I'm not going to get into the details of how to do that because, again, that's more QuickBooks 101. So just a quick reminder, go to the accounting, reconcile, and this you can reconcile your bank accounts or your credit card accounts, loan accounts, whatever, on a monthly basis after you get those statements in. So everybody banks online. I'm sure you'll get probably an email. Hey, your statements are ready, or they're generally ready on like the 2nd of the month, unless it's a credit card and then it's a weird day. But carve out maybe 1 day each month to sit down, go over your finances, make sure your accounts are reconciled, and then you can start your analysis. And then review the 2 main financial reports, the monthly P&L and the balance sheet. Again, going to reports, then you can look for the standard reports in the reports function. You have your profit and loss, P&L, same difference, and your balance sheet. You want to look at those 2 things. You want to look for any anomalies. Maybe you want to kind of just do a general overview or analysis. I'm a little reluctant to open this up because the 2025 data is a little wonky. Maybe I'll just do 2026. Again, this is just a demo account, so let's do next year. Okay, and we're going to look at the entire, well, I think December is what we can look at. So if we want to look at just 1 month, we can look at this. Oops, 26. Okay, so we're just looking at 1 month. And then depending on how you run your business, it's either going to be cash and accrual. Majority of small businesses are going to be cash based. So we're going to go ahead and make sure that function is selected. Maybe you want to figure out how many invoices you've sent versus how much cash you've collected, in which case you could toggle between the two, things like that, or how many bills you have entered versus how many bills you paid, which is again something else we covered in 101 very briefly. So if you don't know cash and accrual by now, make sure you understand that. And then you can do like very high level comparisons. Maybe you want to compare to the previous year. Maybe you want to compare to the previous month. Maybe you want to, and this is my favorite function, which we covered in the last session, go over a percentage of income to kind of check out those numbers and see if that's something that's hitting your targets. And we'll break that down more as we get further along. So back to this, keep your chart of accounts simple, reconcile each month, review the main financial reports, your P&L and your balance sheet. Really important to remember to review your balance sheet. You'll see any weird liabilities or anomalies, things like that. Common mistakes for new businesses, again, mixing business and personal, not reconciling monthly. We discussed why that was important. Over categorization, too many chart of accounts, not paying estimated tax payments. That's not really relevant in analysis, but good reminder. Creating products and services mapped to incorrect accounts. Hopefully, if you're checking the two financial reports, you're able to see whether or not you're creating products and services that are mapped incorrectly to an incorrect account. And we're actually going to create a product service later in the presentation, so you'll understand more about what I mean then. And then another weird one I've seen a lot, and I continue to see, is when people do things themselves, they're always booking credit card payments inaccurately. So just making sure that, like, for example, I saw something up here one time that was a service-based company. They had a income line item that said sales of product income. Well, they're not selling anything. They're not selling any product. So I was confused. I clicked on it, and it was a credit card payment that looked like additional income. So if they were to have returned that to their tax preparer at the end of the year to file their taxes, then it would have looked like, and I think the credit card payment was $50,000, it would have looked like they made an extra $50,000 that year. And yes, they would have had to pay taxes on that. So little things like that are important and will cost you money, those type of mistakes. So I like to bring those up. Okay. All right. Tools to streamline monthly review and stay on top of business health. So I wanted to teach everyone how to build a very basic budget. It feels really simple. It just takes time and work. And budgets are fully customizable to meet your business needs. And they're also kind of how you would start maybe a pro forma, or if you don't have any revenue, or if you haven't started your business yet, then they're also the precursor to like how you would do that. They're a little bit in the similar line. So I can show you the budget and then I can show you how to maybe build a pro forma from there. So QuickBooks does have a budget feature. I pulled it up for you guys here.
Sorry, really quickly, it might just be me, but the screen on the left is a little small. If we could just make it a little bigger, potentially.
Yes. So
Thank
you're left
you.
with the QuickBooks screen, yes? Is that better?
Yes. I think that's good. Thank you.
Yeah. Okay, so the budget function is under reports, financial planning, and budgets. Now, if you were to create a budget, what's going to happen in QuickBooks? You can do it a few different ways. You can select your budget type. You can select the period that you want, the historical period that you want to look at. So we were just looking at 2026. Remember, these were the numbers for 2026. And then you can do consolidated, subdivided, whatever. Or you can import your own This might be, if you wanted to use QuickBooks Budget, you could probably create your own budget outside and import it. But the reason I don't always use QuickBooks internal budget function is because it pulls through a lot of stuff that you can't alter out. So all of these accounts, you just kind of there's they're just extensive and it's not very user friendly when you're trying to make adjustments, corrections, all of that stuff. So it's not my go-to for building budgets, which is where this expression of the best CFO will probably agree that until you're ready for really expensive like FP&A software, spreadsheets will probably dominate in the early stages of your business. I know we live in a world full of AI and all different kinds of software tools and features, but it's so funny that that for this type of work, a budget in a spreadsheet is actually still one of the best ways to do it. Unless you're, again, ready to pull the trigger on maybe some more expensive software. So, so if you look at our P&L for December, can you see my screen now? Because this is
Yeah.
where the numbers will be a little more
Yeah.
important to see. Okay. Okay, so we're looking at an entire year worth of data. And what I'm doing is here we're coming into a new year, we're coming into 2026. In this demo account, 2025 has a bunch of garbage data, so don't mind this, let's pretend it's 2025. So let's just say this is 2025 for the year, and then we're going into 2026, we wanna build a new budget for 2026. I would go ahead and I would export this into whatever format you want to use. And then I would enter in all the information, maybe cleaned up a little and consolidated into a spreadsheet like this. And let me make this bigger. Okay. So you can see the numbers are exactly the same, right? We have 1, 4, 5, 6. Oops, I'm going to get rid of this one. We've already covered that. And then 1, 4, 5, 6. So all these numbers are exactly the same. You can see the net income is the same, right? And then what we're going to do is I'm going to hide this line for now. Okay. We're going to go ahead and we're just going to, okay, so this is 2025. These were our historical numbers. Let's talk about next year. What can we do? How do we want to adjust? And where do we want to be next year? And just as a good rule of thumb, for all of the people who want to make future budgets, I like to do at least a 10% increase on most expenses, unless you have certain things happening in certain periods or you're going to be spending more on something specifically. So, for example, let's just say, oh, I expect, to business kind of operate same as usual next year, or at least my insurance is going to operate under the same principle as next year. I like to go ahead and pad it by 10%. So everything's going to go up 10%. And then let's just say my payroll is always about, this one is 17%, so it looked like it came over this year. Let's just say my payroll is always 20%. I'm going to change that one specifically to be 20%. And then, maybe you decided you were going to rent a new office that's actually going to cost you $100,000 a year instead of that. So you could just add in those different numbers and adjust from there. And then what you do is you can break it down however you want. So you can break it down by quarter, you can break it down by month, simply by, dividing whatever period you want to. And then you can kind of manage your targets, right? So going back to our simple process um, of reviewing each month, maybe you want to review this each month. Maybe you want to review this every quarter. However you want to do it for your business, whatever time you have or dedication you have, or however important it is to you. The most important thing is to make sure that the accounts are reconciled so that, again, the garbage in, garbage out doesn't apply. And then you want to make sure you've reviewed your very basic financial statements before you jump into like some of this stuff, just to make sure that you're not missing anything, right? What if, for example, you had one really high expense. What if you paid $100,000 to a lawyer and you accidentally put it on the balance sheet or something? You would have caught that in here, right, in this part of the process, and it wouldn't be reflected here. So you would actually be missing a very big expense relative to this particular year that you're trying to budget for next year because you simply missed something or you categorized something incorrectly. So reconcile each month, review the reports, and then build or review your budgets. Um, let's see. So that's kind of what I wanted to talk about with budgets specifically. Um, we can also talk when we talk about monthly review, we can also talk about the QuickBooks dashboard right here. I'm not a huge fan of dashboards for DIYers. So unless you have a professional delivering your dashboard items to you, I would say be careful with your dashboards. Don't always love out-of-the-box solutions because again, sometimes garbage in feels garbage out. One bad input can uh, can really end up having you make um, uninformed decisions. So basically, if your data isn't structured, no dashboard can save you, which is why I'm not a huge fan of QuickBooks dashboards because it's all about what's in there. So perhaps, a lot of things that may be common mistakes that people would make in QuickBooks would be like accidentally marked a bill as paid or accidentally forgot to delete certain invoices to customers or things like that that are going to affect this dashboard. And then it's going to kind of not be the best. So, well, yes, QuickBooks does have a dashboard. I wouldn't rely on that. I would say if you're a DIYer, go through the manual processes that we just discussed of like reconcile your account, pull your most basic reports, your profit and loss and your balance sheet, review those on a monthly basis, but then you can also review your custom reports, and that will catch any mistakes that you make as well. So for example, if you're just looking at your dashboard, let's just use accounts payable as an example, right? So if you've entered in bills that you have to pay to vendors, and you made a mistake on that, say maybe you made a date mistake, right? Maybe you made a mistake that says the bill is dated for, November 6th, 2031, right? An accident because you meant to say something else or whatever is a typo. Um, those type of things are going to affect how you view your current finances and your dashboards and everything. So pulling full reports on the functions that you use in QuickBooks is really important. So what we're going to do is we're going to go to the reports section. And then based on your business, so like a product business is going to pull different reports from a service business. Service business is going to pull different reports from a SaaS business, et cetera, et cetera. So we'll start with maybe like services. So services, you would have invoices. And so maybe you would want to know some of these reports. Like a collections report is one of my favorite accounts receivable reports, but you could also pull the details and the summary. Let's just pull a collections report and see what it says. And then you want to make sure you're doing all dates again, because maybe you made a date error. Maybe you didn't capture that in the dates. So let's go ahead and go to all dates just to make sure that we didn't misdate something or make a mistake somewhere along the way. Okay, so now I can see all of these invoices that are outstanding that haven't been paid. And then I can start. First of all, I don't think anybody should ever have this large of a accounts receivable report, but this is a demo account. So if you have an extensive, large report like this, you probably want to call someone for help. But you can see, okay, so Super Slay, they owe us $13,000. We should probably get on that. And if you're doing these every month and you're making your collection efforts, then you should be able to stay on top of uh, who you need to collect from, etc. Of course, QuickBooks has different limited functions about auto reminders and things like that for service-based businesses. So if you're generating a lot of invoices, you could set up auto reminders so that hopefully your accounts receivable doesn't get out of hand. But if you're just trying to get the overall view, you would look at a report like that. Um, and then let's go ahead and actually, let's create a product and service here. So like I said before, we were going to create a product and service because I don't have anything tagged to the service line. So we are going to create a new service. And in order to show top of the list, it's going to be 111. Okay, maybe I'll call it design services or something. Okay. And then it's going to map to, and this is where the mapping is important. So this is where I see people map all kinds of weird stuff. Some people map it to a asset, which is a balance sheet item, which means it will never show up on your profit and loss. Some people map it to liabilities, again, another balance sheet item. But we want to map it to, I have a general service. Let's see, service income. Okay, so this is just service income in our simple chart of accounts. This is the most basic like verbiage we can use. And then I want to save this. And if I was to go and create an invoice for a customer, let's say new customer. Oh, yeah, close that. Let's see. So I'm going to say that this is, oh, okay, so this is a service or 111. So that's the service I just created. And then we're going to go, and we're going to go 200,000. Okay. And then save and close or review and send or whatever you're going to do. And then you'll see this on your report. Let's see. Oh, collections report. We're going to look at all dates. A little slow. Right there. Okay. And so there's the invoice right there. So again, you're pulling your relevant reports. That's how you would create a product and service to map to the correct account. And then you're pulling reports for all dates. The same thing kind of goes for a bill. So let's just go ahead and really quickly enter a bill. Okay. So let's see. This bill is going to be a contractor. Here we go. And then maybe this is for their design services. And then this is going to be $10,000. We could put a customer project there if you're doing customer project tracking. So if you're trying to track jobs by profitability, either you can do it two different ways in QuickBooks. You can do it on the project level, where one customer can have multiple projects, or you can just do it on the customer level. So again, going back to that one, we just billed them $200,000 and all it's going to cost us is $10,000 in design services. It'd be pretty good profit. Save. Okay. And now we are going to go and pull a report for the accounts payable. And the accounts payable is a report that probably anybody, well, I feel like I can't imagine any company not benefiting from using accounts payable. And the idea is because when you have bills, it's really important to understand what your liability is at any given point in time. So sometimes people will withhold bills until they're ready to pay. I don't love that because then you're just kind of, potentially forgetting what's out there or not capturing all of your liabilities on the balance sheet at any given point in time. So I say, like, even if you aren't sure whether or not you're going to pay it or whatever, if you get a bill, put it in here. And then you can always pull a So who you owe, I guess. Um, so you're going to be pulling what you owe there, it's hiding. So I like to use this report is probably my favorite, accounts payable aging detail. So for invoices, it's probably the collections. And then for accounts payable, it's probably this one. And then again, we want to make sure we're using all dates for these because this will ensure that if I made a date mistake or whatever, I'll catch it here. So I should see that $10,000 right there. Maybe that's it. This one, that's it. So this is the bill we just entered. It's on the report. It's capturing all my liabilities. So this is saying that I have, $1 million and some change in open bills that I still need to pay. So again, what you're doing in this part of the process is just going through QuickBooks and you're pulling on a monthly basis. So this is also part of the monthly work. You're just pulling the reports that are relevant, right? So if you're not a service company, you're not going to be pulling this report. Maybe you're a product company and you are selling stuff, you'll definitely want to pull a sales tax liability report on a monthly basis. And it depends on where you file, how often you maybe want to pull this. Your liability, of course, will show up on the balance sheet if entered correctly. So you should be able to see your sales tax liability at any given point in time on the balance sheet. But if you need to pull the specifics of it, or if you need to file monthly, you might be looking at this report on a monthly basis. What else? So yeah, and this section is just kind of broken up into various things. So maybe maybe you are going to use QuickBooks budgets, and then you can just pull a report easily in QuickBooks about your budget versus actuals. If you started with a really simplified chart of accounts, QuickBooks budgets might work for you. Again, not as forgiving in terms of like making adjustments, but if you wanted to have it all in one platform, you could do it. And if you started off QuickBooks using our process of like keeping a very simple chart of accounts, you could probably do it. So that option is there for you, depending on your preference. Customer summary reports. If you were to, let's see, there should be an unbilled charges, unbilled time. So if you're entering transactions and you like say you're purchasing something for a customer and you wanted to pass on the costs to your customer, you could mark those transactions as billable, in which case you could pull unbilled charge reports. Maybe you're using QuickBooks as your employee time, so you could do unbilled time. I'm not a huge fan of the employee functions in QuickBooks. If we use time tracking, other things like that, we're usually using it outside of QuickBooks. So if you're trying to do payroll, we usually use Gusto for smaller businesses, Rippling for mid-size or mid-market. And then both of those platforms have different employee time tracking functions. And then, of course, there's a whole other array of softwares out there if you need more specific time tracking. So this is just not my favorite platform for that. So I'm kind of moving fast over the employee functions. What else? Sales by customer summary. Maybe you want to check a profitability by customer. That's a good one right here. 1099 contractor list if you have to do 1099s at the end of the year. And then for my accountant, this is good to know that these reports are in here. Hopefully you're not having to look at them, but if your accountant requests them at year end, which, it's coming to be year end. So if you're going to be filing on time, your accountant may request either access to QuickBooks, which you can give them if you're comfortable with that, or, they might ask you for a general ledger or a trial balance, things like that.
So sorry
Um,
to interrupt. We
yeah.
just got a request just to make the screen a little bit bigger.
Oh, yep.
Thank you.
Okay. Well, yeah, I'm kind of done with the reports section, but so this section for my accountant is general ledger, trial balance. Those are ones that they're probably going to request. There's a sales tax section, an expense and vendor, what you owe, what your customers owe, and then business overview. Uh, I would say, so if you have a monthly workflow that you're going to start doing for finances, for tools and analysis, right? So part of your process, reconcile your books, pull your basic reports, and then pull your custom reports that are relevant to your company. So those are the three things that I would remember. Now, let's just say you wanted to get a little more in depth about you're like, okay, this stuff is super easy. I'm looking for maybe a platform that I can use their dashboards and play with the inputs and customize it to, provide easy solutions. A really good entry level one is Fathom. Connects really well with QuickBooks, and you can go pretty far with Fathom. It's got functions to get you started. And it's got more like FP&A future stuff in there. And then another one is LiveFlow. So those are just two recommendations that I would give to everybody if they're interested in maybe taking the reporting a little bit further in these within QuickBooks or within another complementary tool. Okay. Before actually, I think my slides are a little wonky. I'm gonna hit the stop share. I'm gonna ask anybody if you have any questions right now.
Just a reminder, if you do have questions, you can chat me. I'm happy to unmute you if you'd like to free form. Okay, no questions?
Okay, if there's no questions, I will go ahead and keep going. Give me 1 second. And if anybody has a question in this time while I get reset, then go for it. Because right now we're going to be getting into a little bit more advanced metrics and things that you can look for in your business and ways to calculate that. Okay, I'll go ahead and share my screen again. Oh, it looks like we do have a question coming in. Oops.
Question is, in our business, we only sell services. What's a simple way to keep that labeled?
Services, service income. Yeah, so hang on, let me share my screen real quick.
Just a heads up, I have allowed everyone to speak, so hopefully you can ask questions directly. I know it can be a little bit tough to use the Q&A and chat feature.
So for the service question, can you all see my screen again? Is that big enough too?
I can see the screen. Yeah, that's good.
So yeah, for a service company, you are just going to be having one line item on your profit and loss. If you have a specific reason to have more, you could. It's not my favorite function. This P&L is really to just kind of give you the 30,000 feet, in my opinion, because you can always get more granular. So, for example, if you wanted to pull a products report, let me see where I can find that. Can't remember if it's in here, if it's in products. Let's see. Give me a second. Sorry. Okay, yeah. So sales by product, service, or category. So just like we set up before in the products and services, you can set up a large, extensive list of types of services you're doing, right? So you are a service firm, okay? What if you have, different revenue streams, but they're all service. You could set them up in different categories here. So maybe you are a marketing company and you do content, influencers, or brand or whatever it is. You could set up those in different products and services that are all going to still flow to that same singular line item, the service income. And then if you wanted to, then you can pull a product, or I'm sorry, it's product and service, but it's a service list. So if you're like, how much money am I making from marketing, or how much money I'm making from brand development, then you could pull a service list and then you could get those details in here. So I like to keep this high level, and then I like to be able to go more granular. So if you were like wanting to analyze additional service offerings, you could set this as one of like your monthly reports, right? That would be specific to your business. I'm a service business. I want to know how much money I'm making on each type of service that I'm delivering each month. So maybe this is one of the ones that you star, or you could also, let's see, where is it? I just lost it again. Sorry. Um, Product or service. There we go. Sorry about that. Okay, so you could also customize it and then save the customization. So maybe you want to see, I don't know, there's different columns you could select. When you'd save customization. This is a different report, I realize, but it's a summary report. So you could then just save it, whatever you want to title it. And then save it. And then also you can set up reports to send to you monthly. So you could group them together and then set up these custom reports to go monthly. So you could set them on a schedule. So let's just say I want to send this one on a schedule. And you can send groups, you could add it to a part of a group, and then everything is going to send to you on the month or at the end of the month. So maybe you just set these, if you're somebody who forgets these things or whatever, you don't have a calendar block for this, you could create a set of reports to send to you. And then if you're DIYing this, then you would know, okay, maybe I didn't finish reconciling the month, but the reports were sent to me. So I'll go back in, I'll reconcile, and then I'll pull this set of reports again. So you can do that, and you can obviously set the cadence and all those different functions. So you can create your list of reports that you like and then consolidate them and have them sent on a monthly basis. So
We
I
have
hope
a
that,
question from Joe. He says, how does our tax preparer have access to our QuickBooks account?
yeah. So let's see. And just so you know, too, tax preparers aren't going to get into the nitty-gritty of your information. So if a tax preparer has access to your QuickBooks, so you can invite them here. You can only allow 2 accounting firms at once. So just be mindful of that. You might have to remove somebody if you don't have capacity here. But you can add your accounting firm here. And then they're just going to go in and they're going to pull reports. And they're going to pull the ones I showed you, the trial balance, general ledger, and then maybe they'll make some adjusting entries, but they're not going to go through your details with a fine comb. So you just want to make sure that, again, there's no garbage in, no garbage out before you tell them to jump in there and pull what they need. All right. Anything else? Okay. So now moving away from QuickBooks a little bit, and we can come back if you guys have questions. The other part of this presentation was to really kind of get into the nitty-gritty of how to almost become your own like controller CFO on a very small scale. So part of this is like, okay, we have our accurate reporting. Now, what do we do with that, right? So if you really want to be good business owners, you're going to have to know how to set up different metrics that you're looking at for your company. So I'm sure most of you probably know what a KPI is, but just in case you don't, a key performance indicator, measurable way to show value that's effective to your company specifically. So while accounting systems may track metrics, the KPIs provide insights that tie to strategy and decision making. So how you start thinking about KPIs is you reframe the financial information that you have, right? So going back to this profit and loss, right? Maybe I'm doing a comparison, percentage of income, right? Let's just say that. Now, oh, sorry, what's going on? Well, you guys saw that before if this doesn't reset. For some reason, our reporting features have had little quirks in them lately. Feature updates, I'm sure. Okay, let's see if that works. Okay, there we go. So let's just say we're looking at our reports on a monthly basis. We come in here and we're looking at certain things like, okay, my gross profit was good. And we haven't really covered gross profit because we were talking about services. Gross profit would really mostly apply to people who are selling products and services, or I'm sorry, products, and then perhaps maybe a little SaaS, depending on internal preferences. But yeah, so maybe you're a SaaS or a product company and you're looking at your gross profit. You want to make sure, okay, hey, my target gross profit margin is X amount. Why is it more? Why is it less? Things like that. So the goal is to move from what happened, why it happened, and then what to do next. Or if you're, trying to build out your budget for the next year, or you're trying to build out your targets for the next year, you're kind of asking the same things. What happened? Why did it happen? And what to do next? Like, okay, what to do next in 2026? I want to get this down. What to do next in 2026? I want to, I'll need to increase this or whatever it is. So, and then what results do you expect from that? So you're constantly on that momentum of, you know, what happened, what to do next, and going in that way. And that's really truly like how you're going to harness the power of financials in your business. So, going back to our profit and loss. So, yeah, maybe you're asking questions like, why did my gross margin change month to month? Why are my expenses scaling or not scaling proportionately with revenue, right? So maybe you'll start, maybe in Q2 or Q1 of 2026, you're going to say, oh, wait, why is it not an increase of 10%? Why is it an increase of, 30%? Like that doesn't make sense. I think I need to look at that. Let's see. Cash flow signals, if you're a service-based company, are you monitoring your accounts receivable days and are they increasing or they decreasing? And what we see a lot of times is when collections are slow, you're essentially like funding your clients' businesses unintentionally. It's almost like you're loaning cash. You're paying out money for your team or whatever to do the work, and then you're not getting paid in an appropriate time to actually receive money. It's almost like you are a bank at that point loaning money. So those type of things need to be nipped in the bud. But you wouldn't know if you're not monitoring your accounts receivable days. And then you're pairing these different metrics that you're constantly monitoring with action. So the why, right? Okay, well, this is this. Well, why is this, right? So let's just use AR as a very simple example, right? You're looking at, well, why is it taking us so long to get the money in? Well, maybe you don't have auto reminders set often enough. Maybe it's the type of client you have. Maybe it's the expectations that are set, prior to this. So a lot of the whys are obviously non-financial, but in order to ask those questions, you're looking at the finances. So you're tying in all of this, like this data and analysis, financial and non-financial. Okay. And then benchmarking. Benchmarking is great. QuickBooks did release some new benchmarking features. I have yet to use them because at my company, we have our own internal benchmarks that we benchmark against our customers a lot. And then also a broader data set outside of our business. But QuickBooks is kind of limited to other QuickBooks users and only a certain amount of QuickBooks users. So it's not it came out, I think, last year. It may be better now, but I just haven't really used it too much. It's one of those things where I'm waiting for it to catch up and be good. Okay, here's some really common financial metrics. Actually, I think there's a slide that was supposed to go before this. 1 second. Okay, here's some other examples of common metrics for all industries, SaaS, product, services. So most CFOs, when you start working with them, will tell you to focus on three things that you want to change or need to focus on or need to adjust. So this is a lot of information. There's a gazillion metrics out there, financial and non-financial, that you could be thinking about and doing and taking action. But what happens is, obviously, it gets to be too much. And so any good CFO will tell you, let's start with three, maybe five, but most of the time it's three. And then you focus on those and you make those adjustments. And then once you've kind of done that, then you can expand that a little bit. So you start off with three. Maybe once you have kind of learned how to like adjust those levers a little bit, maybe you'll expand to five. But you're generally not working with more than five at a time because that's really hard. Unless you're a bigger company and you have different departments, it's really hard to get more than five adjusted at one time. So again, these are the common ones that we use a lot. Can you guys see the screen okay? Is that big enough or should I go like this?
That's great if
Okay.
possible. Thank you.
And you guys will all get the slides too afterwards. Um, so the common ones, revenue growth rate, like how do you want to increase your revenue, you know, month over month, year over year, et cetera. Gross profit margin. So we talked about gross profit margin being really applicable to SaaS and products, but not so much services. Well, services do have their own gross profit margin. It's just more tied to the services that they pay for. So their team, their contractors, things like that. So you can track your gross profit margin if you're a service-based business. It would just look a little different on your profit and loss statement and look a little different. It's kind of be like a back end metric that you're measuring. Net operating profits. So your net operating profit is kind of like above the line profit. Anything down here is subsequential. So you would have your net operating profits and margins that you're monitoring. So again, if you're looking at this as a percentage, figure out what your industry benchmarks are. Like what's a good net operating profit margin for, for whatever type of services for a marketing firm. What's a good net operating profit margin for a SaaS business? And same thing for revenue and gross profit. So those are the type of areas in which you'll bring in the benchmark data if you don't know where to start. And then you have cash flow and burn rate. Burn rate, not so much for services. I say examples for common metrics for all industries. Yeah, burn rate's probably not as relevant because it's more like people that have gotten investors and are burning through cash. Customer acquisition, I think, is something that everybody can monitor and track. Same with lifetime value. And then net revenue retention rate. Those are just 6 common general metrics that if you don't know where to start, pick a handful of those to look at. Or, if you want to look at your financial reports and pick some of those to be more aligned with what your current needs are, that's probably the best. Oh, let's see. Did that one. Okay, so I went backwards a little bit. Sorry, my slides are out of order. So revenue growth rate tracks the increase or decrease in a company's revenue over time, indicating its ability to generate sales and grow the business. So these, remember we talked about industry might be different. Same thing with stages. So growth rate, monthly recurring revenue, 5 to 10%, and AR 50% would be amazing. So good annual recurring revenue growth rate might look different for different stages of a different company. So early stage, you're going to have a faster growth rate. And then the growth stage, it's going to slow down. Mature stage grows really slow, and that's okay. As long as you're in those ranges, then you know you're performing well. Simple calculations, You can also pull any of these off the internet. Gross profit margin, we also discussed that. For product companies, really, really important, the most important industry to monitor gross profit margin. And that's simply your revenue or your sales minus your cost of goods sold divided by your revenue. So this is like, I can't imagine a time where a product company wouldn't be monitoring gross profit margin as one of their KPIs. Like that's just one that sticks on there all the time for a product company. Okay. Okay. Some more financial metrics. Net operating profit margin. We talked about that being a common one across most industries. I tried to pick the ones that go across most industries since I figured it would be probably a mix of everybody here. So net operating revenue minus net operating expenses, and then net operating profit margin. So the margin would be the times 100. And then cash flow. Simple cash flow, you're measuring your inflows and outflows and your burn rate. If you are burning through cash and not profitable, that would be something that's critically important to your business. So this is more of a SaaS related metric a lot of times, or maybe a product company if a product company is pre-revenue or something like that. Burn rates. I feel like these are another ones that people can look at if they wanted to look them up. But they're here in the slides if you want them. We did oh no, we didn't do this. So yeah, customer acquisition and LTV. So this is good for every industry again. So you're looking at your customer acquisition cost to your lifetime value ratio. Again, you can look at these slides when we're done to kind of dive deeper into this information to kind of figure out what the good benchmark is. So good ratio, 3 to 1. That's probably your best bet. So, oh, it says right here, good mentioning. Generally 4 to 1 or higher indicates a great business model. So we hear a lot of pitches with people where that is one of the things that they like to highlight too, is if they have a higher than a 3 to 1. If it's a 4 to 1, 5 to 1, you hear that in a lot of pitches. So your CAC is really easy. Sales and marketing expense divided by the number of new customers. So here's another one of those like investor metrics that they love to see. And so you hear these in a lot of pitches too. Investors and decision makers want to look at hard costs and services amount from acquired customers. This will help investors also determine, if you're looking at this as investors, will help determine, how much it costs for you to acquire new customers, which will help them project the reasonability of your request for funding in terms of customer acquisition, because usually that is a component of financing. So, net revenue retention. So this is more of a established company that has year-over-year net retention rate. So definitely want it to be 100. Better than 100 is great. Okay, let's jump into some Q&A. I also have a gazillion non-financial metrics that will be included with the slide. Just again, it's all to spur ideas, not necessarily to say you have to measure all of these or be looking at them all the time. Start with 3, maybe expand to 5 if if you feel like that's not too much to manage at once. And that's it.
All right, thank you so much. Are there any questions in the audience? Just a reminder that you can now speak directly if you like, versus using the chat feature. All right. If there are no questions, we can go ahead and wrap up. I do feel like we covered a lot of content, so I really encourage you, if you do have any questions, now is the time. We're really lucky to have Marissa with us for the next 30 minutes. So Last chance for questions. Awesome. Well, that must mean that everything is very understandable and very clear. So thank you so much.
Oh, hi. Can you
Oh,
hear
there
me?
we go.
Wait, was that a comment that everything was clear?
Sorry,
I
I
felt like
know,
it was a
right?
lot to cover at once, so I wasn't sure.
I do have one question to ask in regards to let's see here, with the cash flow. Um, I have some clients, we work on 30-day terms, and because we work with, we're a healthcare technology management company, and so we service their diagnostic equipment,
Mhm.
and they will sometimes go upwards to 90 days, 120 days without meeting their 30-day terms that they signed on to. And it's really difficult for me sometimes to receive collections from them. Do you have a collections process that you recommend?
Yes. So there's a few options and there's a few things to unpack in there. So the companies that you're working with is my guess, they're probably larger companies,
Mhm.
so big that their own internal AP, and correct me if I'm wrong, their own internal AP is going to be massive. So you're just like, you're just in a sea of collections or in a sea of AP for them. So a 30-day time window is going to be short. For big
Yeah.
companies, it's short. So if it's a giant corporation, 30 days is going to be short. You just have to readjust your expectations. So starting there, if you can't readjust your expectations and you're like, I have to have the 30-day window, then you'd have to set up different processes in order um, to try and sway the collections process. So there's a few things that maybe you could implement. Maybe it's late fees. Maybe it's like you said, is there a way that we can do a faster collections? Well, maybe you're doing more frequent reminders. There's also we have depending on the customer and the customer's customers, we have a process. So there are some companies that just have for some reason a bunch of customers that are challenging when they come to us, they're challenging to get money back from. And in those cases, we sometimes do this phased out AR process. So it's like your first reminder's friendly reminder. Second reminder, there's late fees. Third reminder, and this is just an example. Third reminder is a threat to go to collections. And so we work with like different collection agencies like Kaplan and things like that um, to try and get people to pay sooner. The collection companies do have certain thresholds for the amount that they will engage with you at, but it doesn't hurt to also try to push for that a little bit. Your customer may not know that, but I think it's about setting up expectations in the beginning. So, again, just to reiterate, there are two probably things that I would look at for your situation specifically. It would be, can I internally manage my expectations to change the timeline? What's more reasonable for them to get those to get paid within their terms, right? So maybe asking the company like, what's your standard timeline? And then being able to gather that information to figure out what's standard across their process, and don't just go off of what I want, do it like roll it out for your entire company, but in order to gather data, just asking people what it is, because maybe industry standard for theirs at their size is 45 days.
Yes. And we work with hospitals, so that happens quite often.
Yeah, so I mean, it's
Okay.
hard. Yeah,
Okay.
but so figure out what the standard is for a hospital, right? And
Uh-huh.
then maybe you can adjust yours so that you're not like, so that you can plan ahead.
Okay. And like you said, we could supplicate with revenue with sales, which are immediate, and then it adjusts my expectations and
Yeah.
my response towards that emotionally, withdraw that and just become objective and prepare.
Because if they're paying on time, even though if it's an extended window and they're paying on time, then you're able to plan ahead. You know
Okay.
when that money should be coming in. It's when you set that due date and then you don't know when it's coming in. It could be 45, it could be 90, but and then you run into this like I can't plan my business because I don't know when money's coming in. So maybe your payment term ends up being 90. You at least know when the money's coming in. You know what you have to do to bridge yourself in that time period. And then if you're seeing habitual payments when you readjust your expectations, then there's a bigger problem there that needs to be addressed in a more forceful way.
Okay. Perfect.